Okay, guys. So I'm going to be entering Telegram in case there's a time you guys can't see my screen. So I'll check moderators. If there's a time that my screen isn't showing, please just send message to me. Cause I don't know if I can hear you. Just send messages to me. Okay. So we're going to do a review. We're going to check the markets now. And what we're going to be checking for is review of trades that happened, right? Review of trades that happens that we could have used key levels to get. We could have used key levels to get. Just reviews of trades that happen that we can use key levels to get. A quick reminder on what key levels are. Key levels are zones in the markets where price loves to react from, right? Key levels are zones in the market where price loves to react from. So when you see a place in the market that is showing signs of reactions, that place that is making market show signs of reactions is what we call a key level, right? Is what we call a key level. And on the higher time frame, where we build our buyers, on the higher time frame, which is where we build our buyers, when we talk about key levels on the higher time frame, we talk about this thing. When we talk about reaction of key levels on the higher time frame, we talk about weeks, right? Weeks. Um, Let me see. Okay. What are wicks now? Wicks are all you see all these long shadows here, all these long sticks from the candles. Those are what we call wicks, right? Meaning what? Meaning that when the market is showing you this week on the higher time frame, wicks like this, all these long sticks on the candle, this is a sign of reaction and rejection, right? This is a sign of reaction and rejection. And now remember, what did we say a key level is? We said a key level is a place in the market where price does what? Where price rejects and reacts from. So now, if a key level is a place in the forex market where price rejects and reacts from, and weeks, which is all these long sticks, are signs of rejections and all that, and rejections and reactions. What does that logic tell you? That logic tells you that anywhere you see a week here, anywhere you see a week, anywhere you see a week here, anywhere you see a week here, anywhere you see a week here, that means that what? That means that there's a key level around where price is rejecting from. Right now, this is a key level. This is a key level here. And what happened? When market came to tap this key level, what happened? It rejected. You see the wick? Look at this. Do you see this? Now, what is the logic? The logic is this key level that is here means a place market will touch, react, and reject from. And now market is showing a week. And what does this week mean? This week means reaction and rejection. So if you join these two logic together, it means that where you see a week on the higher time frame, daily, that's for building the bias now. When you see a week on the higher time frame, which is daily, which is daily, weekly, monthly, yearly. That means what? That means that price is reacting from what? A key level. You see this here? Price is reacting from a key level. Price reacting from a key level. And then when price tapped here, what happened? Price immediately bought. Now this is the daily time frame. And you can see that what? On this daily time frame, what can you see? Price immediately bought up to here. So imagine this is a daily time frame, meaning that each candle represents a day. So imagine on these days, 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day, you were able to deduce that the direction of 8 day markets on Great British to dollar, GBP USD would be bullish throughout. That means you've gotten the directional bias for straight 8 days. You were just looking for buys, right? For straight 8 days, we're just looking for buys. Now, with this logic, this is how we are going to build our bias into this class. This is just how we're going to build our bias into this class. Using this logics of rejections. Using this logic of rejections. Logic of rejections. That's how we're going to build our bias, right? That's how we're going to build our bias. On GU today, actually, what's this is a week now. This week here. You see it? This shadow. What does this shadow mean? This shadow means there is what? There is a rejection happening here. And like I said, when you see this shadow, meaning there's a rejection and reaction, that means what? That means there's a key level close by. Now you can deduce that there's a key level right here. Right? You can deduce that there is a key level right here. And you have this and this, right? So now when we see this key level rejection and you see price closing below it, because if price close above, let me show you guys this thing. If price should close above, that means we will have what? Higher prices, right? Meaning like we'll have would have how what's the word I put it? We'll have possibilities of more buys. More buys. If price close above, meaning up, meaning higher prices, which you can also deduce to, you would have possibilities of more buys. But if price closes below like this, price closes below, meaning what? You have lower prices, and meaning that you would have more sales. It would mean you have more sales. So in this one, price rejected and close above. You see this week here? This week, this is the starting of this week that happened here. This tip right here. This tip. Now, if price had closed above of it at this level, meaning there will be higher prices. But the fact that price bought up to this level and then now started reducing, showing this week, reducing up to this level here. This level. That means what the price do? Price closed below this level, which means lower prices. So today on GU, what did I do after seeing this information on GU? G level reaction, lower price, rejection, and close. I just went down to the 4-hour because, like I always say in all the free videos I've dropped, this rejection alone does not mean because price closes below and signifies lower prices, which signifies sell pressure. That doesn't mean you just go and start selling randomly, because you might get burnt out. You have to wait for confirmations. So now, what's the confirmation? The confirmation is you would want to go to a time frame below and look for what? A breakout to the direction which the price closed. Now, the direction of this candle close was to the downside, right? So that means when I go to a time frame below, I want to see a breakout to the downside. Now, I come to the 4-hour time frame on this day. Look at it. 4-hour time frame on this day, and what do I see? A breakout to the downside. How can I see a breakout to the downside? You can see it from the line charts, which is this right here. So this is what I did on GU today. This was the line chart, and this was the breakdown below on GBP USD. The breakdown below, right? The breakdown below. So now what I did is I went to time frame below to now get this my structure in a more clearer form. Lowest I go to is 1 hour. Now on 1 hour, what can you see on 1 hour? A break of structure to the downside. A break of structure to the downside. And this is a sweep signifying that this place is what? This place is a protected zone. A sweep which signifying this place is a protected zone. And then based on timing, what happened? When price broke structure to the downside, price started buying up like this, right? At this time, this was 8 o'clock. Price sold down, came back up. This was 12 o'clock midnight. So this is when Asian came. So that means all this place was what? Asian high, like this. All these places were Asian high and there were liquidities. Price was coming up because there is no internal liquidity here. I can't go deep down on internal liquidities and what they do, but I'm sure you guys, some of you guys should already know what it was, what internal liquidity is. We're just going to be doing trade breakdowns today. So now, price buying up. This is being Asian high, all this Asian high. Price is buying up and then started selling down. For the people that do not want to go and be sleeping at the night time, they say they want to go and be trading instead of sleeping. So price was doing what? Engineering liquidity. Because one thing that session does, Asia session, London session, and New York session, one thing they do is they create liquidities, they attack liquidities, and then they produce momentum, right? They produce momentum. So at this Asian point, what was Asian doing? Asia was creating liquidities, which is all these upsides, downsides, all these fake breakout structures here. Were what? We're going to be engineered liquidity, making people think price had already reacted and started selling down, so they want to sell. And then what happened? London came 6 o'clock here and started buying up. Now you that knew that you waited for liquidity and you saw Asian created all this liquidity pullback, you will just pick the closest key level to this liquidity, and you can see this open close key level here, which price came 8 o'clock London session, 9 o'clock London session to tag you in. There you have your key level waiting for you. You put your SL slightly above the protected high and your TP below this low. So what was this? And then today, there was news today. There was US JOLTS job opening, which happened during, I think it was 2 o'clock, 1:30, 2 o'clock. It still happened during New York. So Asian created the liquidity for you, which was this Asian high. New York went to your key level to tag you in, which so New York attacked the liquidity. Asian created the liquidity. New York attacked the liquidity. Sorry, London, Asian created this liquidity here. London, which was 8 o'clock, attacked the liquidity which Asian created and then started selling down. And then what's it called? New York joined the selling to sell you down. New York brought the momentum, which was the news, and sold you down right at this point today. All this happened in a day's work. So all this happened in a day's work like this. Tap into this key level and hitting down to your TP at 2 o'clock today, and you'd have been out of this market with what? A 3RR. Now all this I just taught you guys is just extra knowledge to add to your confluence, But pure key level, trading pure key level, this is just all you have to do. If you traded pure key level, you came here, you got your key level and your reaction like this. You came to a time frame lower, you saw your breakouts, trading pure key levels now, new extra additional English. You saw your breakout here, you went to the 1 hour to refine your breakouts to a reasonable breakout structure to get a clearer structure form, which was this. You waited for your liquidity, which was this, and then you just picked the closest key level, which was this QMR here, this QMR key level, or this key level right here, two of them collapsing in the same place, and then you just pick your entry without even using all this extra confluence, logic, understanding, all these things, and you'd have still gotten yourself a what? Because SL would be slightly above here. You'd have still gotten yourself a what? A 3RR like this. You'd have still gotten yourself a clean 3RR with just this like this. An easy 3RR setup without even stressing yourself with extra knowledge, deep liquidity, Asian session, all this. No, just breakout, liquidity, key levels, rejection, boom. 3RR for that day, you leave the market. Because you see now, daily hit your 3RR, which was the main TP. What happened? Some people wanted to hold this thing all the way here and just keep on selling, but you're just trading with your rules and everything. This is the main target because this was the low. After this break of structure, this was the last low. It came, it hit your TP, and then it just bought up. As easy as that. Let's see. Let's see what other thing happened. Okay. I think I posted a sniper at AEDJPY today. This was the sniper I posted. So a lot of people were wondering how I got this sniper. You see how it just with two candles, the first candle tapped it and the second candle TP'd it, doing just two candles. You won't even have to stress if you have a deep understanding of key levels and you have a deep understanding of what's it called, of trade management. You're not chasing trades, you're disciplined in what you do. You don't even have to stress. Now, what did I say? Same logic, key levels, places, price rejects from. Wicks, which is all these long legs on the candles, are signs of the rejections. Confirmation of these two logics is going towards a time frame below and looking for what? A breakout to the downside or to the upside, to the direction in which the price is rejecting towards, right? The same logic, the same logic. Look at this now. Key level here, weak reaction, weak, which is the sign of reaction here. And where did it reject towards? It rejected to the downside, meaning on the time frame lower, we want to see what? We want to see a breakout to the downside. Now I come to the downside. What can I see? From here itself, we can just literally see a breakout without even entering the line chart. What can you see? A breakout structure to the downside without entering the line chart. A breakout structure to the downside. What key levels can you see after price completed this major breakout structure? After this major breakout structure here, what key level can you see? A neat key level that has not been used. You can see this key level right here, and you can see this candle coming close to this level. Now, most of my students already know what this candle signifies. This candle is a really, really strong liquidity. This candle here, it's a really strong liquidity. If you have knowledge of this candle, just what this candle can do, like the deep knowledge of this candle, and all you target is a 1 to 3 RR, I promise you, you'll be profitable. You'll be so profitable, like you won't even believe what happened. And then what happened? Just look at the sniper entries. It's not as if I force sniper entries. I don't force sniper entries. The strategy I trade gives the precision already. Look at this. Your SL is where above these protected points, and your TP is where the last low is created before it came here. So now what happened? Price used one candle to sniper to tag your entry with sniper entry, and he used the other candle to sell down immediately to your TP. What was this, guys? This was a 7RR trade. A 7RR trade, 7.8RR trade, easy. A 7.8 RR trade without doing what? Without coming to the market and starting to do break of structure here, a break of structure here, break of structure here, we are not down, break of structure here, we are not down, break of structure here, all these long technical analysis. Then after you do this thing, you now end up getting a 3RR setup. The 3RR setup will now hit SL after waiting for 4 days. That, like, you have to evolve. This is pure knowledge, pure logic. Stop it at 3RR, stop it at 7RR, stop it at the main CP. It will still get there. What did you do? We weren't even concerned, and this is just daily, to be matter of fact. We didn't even go to monthly or weekly to get the main info. We weren't even concerned about the market overall structure. What did we do? Just sometimes this is how I trade sometimes. I just come to my daily, mark my key level, bam, first line, like this, rejection. You've seen your what? You've seen your breakout, which is here. You've seen your breakout, which is here, this breakout structure, or you check your line chart and you see breakout to the downside. So what do you now do? Your second line, which is here, boom. Your third line, which is your TP, boom. Then you just put your what's it called? You just put your position size. And what is this? The whole forex market that people are finding it hard to trade. You just analyzed it using what? 3 lines. You literally did, like, forex could not be this easier. You analyzed it using 3 lines. First line here, second line for entry, third line for TP. A whole forex that people would enter their charts and use like 10 minutes to get here. Like, you just pick 1 or 2 pair, you pick your fixed RR or where you want to stop your RR, you pick your discipline, you pick how many trades you want, you pick how much you risk, and all you do is you don't come and start entering weekly or daily, which is actually good, but you don't come and start looking at, okay, there's a break of structure here, this one here, liquidity, we'll wait for price to come here. Like, you can't be doing all this now. No, 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 no. This is why a lot of people are still trading. This is why a lot of people are still not profitable. There's the difference, the thin line between where you are and profitability, I swear, is the knowledge. It's just the knowledge you can get. What you just did here was that you just analyzed forex market using, and sometimes it's not all going to be rosy. I'm not going to lie to you, that's always going to be rosy. Never. The forex market is never rosy. No, you're going to get some losses, but when you apply easy, but you cannot be trading a market that is already hard. Your strategy too will not be hard. As how now? As how? Make it make sense. The forex market is already hard though. You dey chop SL constantly. You now still be trading a strategy too that is hard. How do you want to? Why won't hardship be in your life? Well, if everything is hard, if the forex market is hard, at least let your strategy be easy. Let your strategy be easy. Let the forex be hard. So you just know the strategy is sweet. If you hit SL, you close laptop, you go and watch series, you go and watch movie. If you don't hit SL, you still close laptop. If you use TP, you still close laptop. Because don't let the wind get to you. The wind used to get to me sometimes, I won't lie, but don't let the wind get to you. You hit SL, you close laptop, you go and watch TV. You hit TP, you close laptop, you go and watch TV. But then know that you start doing something like this now. Break of structure here, break of structure here, break of structure here. All that just for you to now come and hit SL. I swear to God, I used to trade like this. I swear you will hate your life. I promise you. Forex market is already hard. You can't your strategy, your approach to now trade this can't be hard again. You have to make it easy and boring. You have to make it easy and boring so that you get profitability. You have to make it easy and boring. The boring is the discipline, the easy is the knowledge. Just 3 lines. Let's look at what other trades. I'm trying to look for trades I took. Um sorry, let me just go back to Telegram real quick. Can you guys hear me? Manny, where are my moderators? Am I still on? I just want to confirm you guys have been hearing everything I've been saying. I don't want to. Manny or hey, my moderator. What's up? Are you guys still hearing me? Okay, Manny is not talking. I'm not hearing you. Diola, can you hear me? Clean. Okay, clean. Manny has. I bet. Don't worry. Okay, okay, clean. Thank you, Manny. I don't know. I put Valor Trades. I don't know why Valor Trades isn't replying. Let's look at if I see any other trade. Okay, there's one trade that my general students and one of my students that I teach privately, he showed me about, but it was on US 30 though. It wasn't on all this. It was on US 30. So let's check it out. He showed it to me on US 30, and some of my students too caught it. Him too caught it. I was really, really proud. Let's see how did he get. Let's see how he got this trade. Let's try to see how he got this trade. Okay, I guess it was a sell trade. So if I want to like figure out how we got this trade, because I don't trade this. So there's a key level here, reacted here, and also reacted here. I'm guessing it was this second candle, because this candle was yesterday's candle. This is a daily time frame. So this candle was yesterday's candle. Rejected from this key level and dropped down. I checked the 4 hour. What am I seeing? A break of structure towards the downside on the line chart. You can just see a break of structure to the downside, or a normal break of structure to the downside. Easy. Okay, this is what he did. This is what my students did. After this break of structure to the downside, it broke out with momentum. So I guess I understand what my students did. There are two things. Number one, there's this candle, there's this SCF, which is a candle, SCF, which is a candle that shows a liquidity. Like just one single candle will give you a powerful liquidity. It is here. I'm seeing it already. I can see it already. And there's also what? There's also an engineered liquidity here. What is an engineered liquidity? I'm sure you guys know. Engineered liquidity is when price doesn't give you a liquidity. So price goes to your POI and then starts creating a liquidity for you. So that price can now do what? Attack the liquidity, tap your POI and sell down. This is what an engineered liquidity is. So that's what I can see here, honestly. I can see a breakdown to the downside, an engineered liquidity, and a key level which is very close to this liquidity and which is also overlapping inside this big imbalance. This is what my students ate today. Look at this key level. Boom. This key level like this. And just look at this. It's one candle that hit your CPU. Don't even stress yourself about it. It's one candle that hit your TP. Look at this. Okay, I think one of the private students that sent this to me, his SL was tight up to here. And look at the candle that hit your TP. Just this black candle here. This was a what? 6 hour trade. This was a 6 hour trade. One candle, 6 hour trade. So now, if how I just broke this thing down is easy. I'll use the concept of 3 lines again to break this straight down for you again. What can you see? First line here, boom, rejection on yesterday's candle. First line. On 4 hour, can you see your breakouts? Yes, you can see your breakouts, which is this break to the downside. Can you see your liquidity? Yes, you can see your liquidity, which is this pull, this engineered liquidity, price coming up and then pulling back before coming to attack it. So you can see engineered liquidity. Then now, what can you see? This one now, you know the funny thing, you don't even need 2 lines because let me show you something. Let me show you guys something. This same key level that we use to make our buyers is also a key level here on daily, which is also this key level that price reacted from. So this one, you don't even need 3 lines. What you just needed was this and then a line for your TP, which is this, which is here. And I'm just taking it from the exact same daily key level I used to make my buyers, which is this. So now, a US 30, which is a stock, Dow Jones, some of my students send this TP with me, and what's it called? You just analyze it with what? With what? What's it called? With 2 lines, which is what? This first line, just this line on the daily, just only this line on the daily, only this key level line. And what have you done? You have analyzed it, this US 30 market, this line breakout, tagging this same line again. You didn't even draw a liquidity on the 4 hour. You tag this same line again that was on the daily and hit your TP. Since it's all key levels, everything is key levels. Like I teach my students, key levels are everywhere. It's subjective, it's repetitive. It doesn't matter the time frame. It's all key levels. And then coming to the 1 hour, what can you see? You can see it's this black candle that tapped it. And it's this same black candle that hit TP. One candle, just one candle, gave you your 5-hour TP today. Look at it. This same cap, this white candle's bought to it, but it didn't tap it. Is this black candle? Look at it. Is this black candle that tapped it? Immediately tapping it up, it immediately reverts down to your TP. Tap and go. Sniper entry TP. Sniper entry, sniper to entry and sniper to TP. That is literally, and this was today. Today is what? Today is Tuesday. And look at this, Tuesday, 30th of September. This happened by 2 o'clock. Tap, tap, you're out of the market. You're out of the market. Tap, tap, you're out of the market. It's not even a big deal like that. I'm not even gonna lie. It's not even something crazy. Maybe I'll take one more because I just wanted to do a review of this NZD card. But this is something I was marking out. A trade currently in progress, something I was marking out. But I want to start trading just one pair. So I'm not gonna do this. I'm going to look for, I want to see if there's one more trade that I saw this week. I don't know. Was there any trade I saw this week? Because I wasn't really trading this week. I haven't really been trading. I've been taking time off chats. I've been taking time off chats and doing what's it called? And teaching students and making, just feeding back the community. That's what I've been doing. But from October, I'm going to go back to locking in on my personal self. I'm trying to remember a trade that one of my some students sent in the general mentorship. That's what I'm trying to remember. Can't enter the general mentorship because I'm not sure. No, it was what? Okay, let me check in the USD. Just looking for one more example. One more example. What was I drawing here? Jesus Christ. Okay, I was teaching somebody something here. One more example. Euro JPY. One more example. Euro JPY is selling. GJ. I think I took a hit on GJ. No. Hmm. I haven't really traded this week, so I don't have. That's why I just said, let me just show you guys some few things which I saw in the market. Because it's been long I traded Euro card. I used to trade GG card very, wow. Wow. I forgot about this trade. I'm not going to lie. I forgot about this trade. But this will be the final trade breakdown. Let me do this as the final trade breakdown for you guys. I forgot about this trade. I forgot about this trade so bad. And what this trade would have given me would have been life changing. I forgot about it. That's one of the disadvantages of trading multiple pairs. Changed my life. This Kevin King will be whining me. That's one of the disadvantage of trading multiple pairs. It's draining. I'd advise people when it comes to trading, you have to treat trading as a business. If you find a strategy and it works well, at first you would want to go crazy with it, normal human intuition. But then at a point there, just calm down and trade like, should I say trade like a businessman? Take trading like a business. I'll say it like that. Take trading like a business. Target monthly goals. Don't target daily TPs, weekly TPs. You can hit like 2 sales in a week. That's not your target, so it shouldn't bother you. Just target on coming to the month strong, right? Let's do a full breakdown on this. Let's do a full let's give you guys source on this. Let's start from monthly. Let's do a full top-down analysis and breakdown on this. This is the last one, and then we'll call it a night. I would record this, and I'm recording it. I would convert it and send it so the three of you guys can keep on watching it over and over again, so you get something out of it. I remember I was trading my former strategy now, and I've seen this as breakout structure, and I've wanted to buy here, and I've seen this as liquidity, and I've waited for 2 years just to hit SL. Thank God for growth though. So let's do a top-down analysis. What can we see on top-down analysis? Remember, key levels are places where price reacts from. Wicks are signs of reactions. What is this? A key level. Key level. What is this mark here? A wick, which is sign of reaction. We come to weekly because remember, a wick rejecting does not signify this week rejected above, right? It's rejected from this key level and closed above, which indicates higher price but does not assure higher price. What do we need for higher price? We need to go back down to a time frame lower and look for a breakout to the upside, right? I go to a time frame lower, which is the weekly time frame, and what can I see? Price rejecting from this key level and breaking out. Where did it break out to? To the upside. Let's look at this on the line chart. What can we see? A breakout to the upside, right? Now we're following logical. Breakout to the upside, meaning monthly and weekly are saying the same story, that there is a bullish sign. There's breakout to the upside, there's a bullish sign. So now what can we now see inside this breakout to the upside structure we have? What can we see again that we transfer our weekly story to our daily story? What can we see? We can see a key level here and a key level, which is place where price reacts, and weeks, 2 weeks actually, which is what this thing, signs of reject reaction. So now where are the 2 weeks? You see these long weeks of this candle rejecting on this key level, which is what? Signs of reaction. So what does that mean? We would want to come to daily and see. Now monthly is giving the same thing as weekly. Now what if weekly is saying the same story as daily? Now we come to the daily, and what can you see? Beautiful. On that exact place where daily, where they weekly rejected weekly key level, it had a what? A breakout to the upside on daily, which means weekly is saying daily story. Now this is a beautiful thing in key level trading. What does this now tell you? This thing tells you something beautiful. It tells you the monthly time frame plus the weekly time frame. This free mentorship I'm giving you guys now. I'll probably never do a class like this again. A monthly time frame plus the weekly time frame plus the daily time frame are all saying the same thing. What are they saying? Bullish. Oh my gosh, I have a horrible handwriting. Anyway, they are all saying bullish, right? So now we can also see this as what? Daily key level, rejecting daily key level. I come to 4 hour, and what do I see? A breakout to the up freaking side with what? All these momentums here. Then price now starts doing what? Price now did, okay, there was actually a quick, there's actually something quick here. There's actually something quick here, but should I show it? Should I show it? Should I not show it? Should I show it? Should I not show it? Should I show it? Should I not show it? There's something really slick that happened. Um, no, I can't show it. No, 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 no. I can't. Can I? Can I? Chill. Chill. I might be able to show it. Nah, I can't show it. It's going to take a lot of explanation to do. I'm sorry, guys. I can't show. It's going to take a lot of explanation. Let's just continue on the bullish steps. Okay, I'll just show it. I'll just show it. Now, what does this mean? This means that what your breakout to the upside is right here. Breakout to the upside, right here. And what was all this sweep? You see, this is looking like an A plus setup. This is the type of setup you can take a loan for and knock lot size. So now I'm just joking. No, I'm not joking. I'm just joking. I'm just joking. Okay, so you break out to the upside, and then what happened here? There was a quick sell here. Most of my students would have caught it because why? They would have traced where the key level of this reaction came out. There was a breakout here. Just know that this thing was from a key level reaction on the daily. I won't show you the key level reaction, but just know this was from a key level reaction on daily. There was a breakout here. There was a SCF here, which is a candle that shows you a very, very powerful liquidity. And there was what? Your closest key level here. So there was liquidity, breakout, and key level. What did this do for you, my brothers and sisters? This gave you a sniper entry, SLR below here, a sniper entry. And now, you know, your main objective following daily. This is why I always talk about, emphasize on dailies, monthlies. Like, you have to follow the higher time frame. Higher time frame showing you what the main structure is a bullish structure. So this thing we are catching is just a sell reversal, and then we're now going to come to the 1 hour to look for our main sell. And what can we see on the 1 hour? Looking at this as a structure on the whole, we can see momentum pullback, momentum. For those on my generals or my private, you would understand what pullbacks means and laws of momentums and pullbacks. So you'd understand what this pullbacks means. But I'm just going to tell you guys as this pullback is what a liquidity here. So this is your liquidity. After all these pullbacks, this is after all this momentum, this is your first pullback, which is your liquidity. Where's the closest key level to this liquidity? You have a key level right here. Boom. Unrealistic setups that people will be scared to waste their money on. That's the type of thing I pick. And what do you see? You know this is the main place your buy would happen, and you know your sell is a reversal. So what do? You take a 7 hour sell to your liquidity zone. You stop it at the liquidity zone because sometimes price can just take the liquidity and leave you. And then what happens? You take your buy from this zone, SL 20 pips, and then what happened? You now take, since the buy is the overall structure, you use the buy to clear everything. See beauty now. I just did top down analysis and everything for you guys. I literally just gave you guys game. I'm not even going to lie. I just gave you guys game. Look at this. Look at this. Sell here, bought here, done for the month. See beauty. See structure. See where key level comes to play. See where key level comes to play. It's all about people that would trade liquidity and they'll be waiting for something here, but nah, it's not. Anyway, that's all I wanted to show you guys today. That's all I wanted to show you guys today. I know a lot of you guys might have some questions, although I won't lie to you, I do not have the time for questions right now. But we're going to host another session where our next section is going to be on questions. So you guys can jot your questions down. Our next session, maybe on the weekend, would be on questions and answers. So I really hope you guys learned a lot from everything I gave you guys. This is free game. I really hope you guys learned a lot from it. And have a nice day, guys. Have a nice weekend. I wish you all the best in your trading and everything. Stop recording.